everyone, Zach Pickoff here, and welcome back to another lesson video. Today, I will be going over the 23-3 text. So let's jump right into the video. Okay, so as I had stated before, I'm going to be going over the 23-3 text, which is the third and final lesson in chapter 23. That's right, after I finish recording, editing, and uploading this video, along with the 23-3 work together, we will be done with chapter 23. And we'll be moving on to our final accounting chapter, which is chapter 24, relatively soon. But anyway, let's jump right into the 23-3 text. So in this lesson, we will be learning about dissolving a partnership. Alright, so there are a few key terms that I'd like to go over before we start the accounting part of this lesson. So the liquidation of a partnership is the process of paying a partnership's liabilities and distributing the remaining assets to the partners. Realization is cash received from the sale of assets during the liquidation of a partnership. And a limited liability partnership, or LLP, is a partnership that combines the advantages of the partnership and the corporation while avoiding their disadvantages. Okay, next we're going to be talking about the account balances before realization. So what we're looking at here are the account balances before realization. And as you can see, the cash account has a beginning debit balance, which is $21,000. The supplies account has a beginning debit balance, which is $1,500. The truck account has a beginning debit balance, which is $20,000. The accumulated depreciation truck account has a beginning credit balance, which is $8,000. The accounts payable account has a beginning credit balance, which is $4,000. The Adam Walker Capital account has a beginning credit balance, which is $18,000. And the Shirley Jeter Capital account has a beginning credit balance, which is $12,500. Alright, next we're going to be talking about calculating and recording a gain on realization. So this first transaction reads, on August 1st, received cash from the sale of a truck, $13,000. The truck had an original cost of $20,000, and the total accumulated depreciation recorded to date is $8,000, and the receipt number is 316. Okay, so the way that we calculate a gain on realization is as follows. We take the value of the asset received and we subtract it from the book value of the asset sold by taking the original cost and subtracting it from the accumulated depreciation. And that will give us the gain on realization. Once the gain on realization has been calculated, we can then record the entry in the cash receipts journal. Okay, next we're going to be talking about journalizing the liquidation of liabilities. So this next transaction reads, on August 4th, paid cash to all creditors for the amounts owed $4,000, check number 422. All right. So when we journalize the liquidation of liabilities, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is August 4th, in the date column. Next, we place a check mark in the account title column. After that, we write the check number, which is 422, in the check number column. Following that, we record the amount, which is $4,000, in the accounts payable debit column. And finally, we record that same amount again as a credit to cash in the cash credit column. All right, next we're going to be talking about calculating and recording a loss on realization. So this next transaction reads, on August 1st, received cash from the sale of supplies, $1,100. The balance of the supplies account is $1,500 and the receipt number is 317. Okay. So the way that we calculate a loss on realization is as follows. We take the value of the asset received and we subtract it from the book value of the asset sold, and that will give us the loss on realization. Once the loss on realization has been calculated, we can then record the entry in the cash receipts journal. Okay, next we're going to be talking about the account balances after the liquidation of non-cash assets and the payment of liabilities. So what we're looking at here are the account balances after the liquidation of non-cash assets and the payment of liabilities. And as you can see, the cash account has an updated debit balance, which is $31,100. The Adam Walker Capital account has an updated credit balance, which is $18,000. The Shirley Jeter Capital account has an updated credit balance, which is $12,500. And the loss and gain on realization has an updated credit balance, which is $600. All right, next we're going to be talking about distributing a loss or a gain on realization to partners. So this next transaction reads, on August 6th, recorded distribution of gain on realization to Adam Walker, $360, and to Shirley Jeter, $240, memorandum number 412. Okay. So when we distribute a loss or a gain on realization to partners, what we do is we take the balance of the loss or the gain on realization, and we multiply it times the fixed percentage, and that will give us the share of the balance of the loss or the gain on realization. So once the share of the balance of the loss or the gain on realization has been calculated, we can then record the entry to distribute the gain or the loss to the partners in the general journal. Okay, so the last thing that we're going to be talking about in this lesson is distributing the remaining cash to the partners. So this last transaction reads, on August 6th, recorded final distribution of remaining cash to partners for Adam Walker, $18,360, and for Shirley Jeter, $12,740, check numbers 423 and 424. All right. So when we distribute the remaining cash to the partners, there are multiple steps that we have to follow in order to complete this process. First, we write the date, which is August 6th, in the date column. Next, we write the first partner's capital account, which is Adam Walker Capital, in the account title column. After that, we write the first check number, which is 423, in the check number column. Following that, we record the first amount, which is $18,360, in the general debit column. Then we write the second partner's capital account, which is Shirley Jeter Capital, in the account title column. After that, we write the second check number, which is 424, in the check number column. Following that, we record the second amount, which is $12,740, in the general debit column. And finally, we record the total amount, which is $31,100, as a credit to cash in the cash credit column. All right, so that is the end of the 23-3 text. In the next video, I will be going over the 23-3 work together. Okay? Thank you.